Good evening and welcome to our inaugural installment of the Omac'S Mortgage Hour here on Rogers Television. My name is Dan Flaherty. Alongside me, Dave Providenti, the man behind Omac'S. And for the next hour, we are going to give you all sorts of very useful information, and really not just for the next hour, but going forward Tuesday nights at 7 o'clock here on Rogers Television, giving you all sorts of information to help you make the most of your money. And that basically in terms of dealing with your mortgage. A lot of people have mortgages and they can be a burden and they can be confusing, and in some ways they can awfully be intimidating as well. Well, thanks to Dave, we're going to dispel some of those myths, some of those misconceptions,
Sure,
and really put people on the right path. So Dave, this is a new foray for us on television. It's pretty exciting to have you here to talk about mortgages.
it is really an exciting time for us in Omac'S especially. Yeah, we've been talking about mortgages on the radio for the last 6 years here in the London area. So this is a new level for us, a new medium that we can reach a whole new audience. So as a company, we're excited about being together with Rogers on another venture and amongst the other ones that we do.
I was going to say, because a lot of people recognize you from your commercials on Rogers Television. We usually see you standing alongside Rob Schremp on the ice at the John Labatt Center. Your logo's everywhere. It's on the phone book. You see it on billboards, in the paper, all over the place. So you're really trying to get out there so people get to see it.
Absolutely. We do want to get our message out to the public, and we've been quite good at marketing, I think, and getting our logo out there. We started right here in London, so that's why you see so much advertising in this area. This is where we first started, and we've grown from here. So print, radio, billboard, television, we like to do everything, and this is just another step for us, and I hope the viewers will get some great benefit from it.
Well, we are going to give you an opportunity to take advantage of the expertise sitting immediately to my left by calling us in studio at 672-1313, 672-1313. If you call, we will take your numbers and we will get to your calls in the second half of the program. But we would like to answer your questions. Dave has brought along the mortgage calculator. We'll be able to give you an idea of exactly the kind of savings you can achieve when you deal with a mortgage broker. Now, Dave, we've talked a little bit about Omac'S, but let's talk a little bit about you. What drives a guy to become a mortgage broker?
Well, it just was an opportunity that came to me. My wife Claire and I, who owns the business with me, we moved to London in 1993. In 1994, I decided to try the mortgage business part-time, and within a couple months I could see it had a lot of growth potential. So it became my full-time job, and here we are 13 years later, and we own the company, and we have 30 locations across southwestern Ontario, ranging from the Toronto area right down to Windsor. So it has grown quite quickly, and it's been fun. And we've attracted the same type of people to our business, and it's been a fun ride.
A lot of people hear the term mortgage broker, and it may be something that's new to some people. When you look at how many people are using a mortgage broker in Canada, is it a significant percentage of the population?
Well, it's becoming more and more all the time. When we first started this business in '93, only 3% of the public, of the Canadian public, used a mortgage broker. That's now grown close to 30%. Compared to our friends south of the border, where 75 to 80% of the consumers would use a mortgage broker, we still have some ways to go. And that's what's making us excited about the future. We're looking at future growth, not only in Ontario, but across the whole country of Canada with our other affiliate called CMAC.
Wow, so we're coast to coast here with this venture anyway.
Well, we're starting to go there.
So now we've got a bit of an idea of the amount of people who are using a mortgage broker. What about what a mortgage broker does? Because again, it's a term that some people may be familiar with. How is dealing with a mortgage broker different from, let's say, going down to the bank to talk to the mortgage person at your local bank?
Well, the biggest difference is you're not dealing directly with the lender. You're dealing with a middle person. In this case, it's a mortgage professional who basically just specializes in that product. When you're going to a bank, we all love the bankers, but they have a lot of different jobs they have to do. We simply specialize in mortgages, and we have quite significant volumes, and what that does is gives us negotiating power to give the clients a better interest rate or a better product, or make them aware of a different product that their local bank may not have. So it's kind of similar to one-stop shopping. When you need car insurance, for example, you would call your insurance your car insurance person, they would shop different companies to get you the best insurance rates. We do exactly the same thing, but only with mortgages.
Okay, so when someone deals with a mortgage broker, it's not necessarily the mortgage broker who's the one who's actually lending the money.
That's a really good point. A lot of people think that OMAC is lending them the money, but we're not. We're placing the mortgage with many big lenders, many big banks that everybody knows and recognizes has a broker division. And that's where the money is coming from. The other interesting point to make, too, is that when you're dealing with a mortgage broker, you have access to broker-only lenders. There are lenders out there like First Line Mortgages, for example, and MCAP Mortgages. I'll mention them. They're our top two lenders, actually, and they only deal with brokers. So unless you go to a mortgage broker, you'll never get through to this particular company who might have the right product that you need.
Now, there are a lot of people out there who are great negotiators. I'm related to several, actually, who are great negotiators, and they feel, you know, I know how to negotiate a deal. I can go in there, I can sit down with the person at the bank across the table from them and say, I know how to get the best deal from you.
Right.
But can they?
Well, it's a good comment, and some people, I would encourage them, if you think you can negotiate the best deal at your own bank, give it a try. Give us a call back, and we promise we won't waste your time, because we're really busy, and I know you are too, as far as the client, right? And if we can't do better, we'll at least confirm for you that you got the best rate. I mean, use us as a second set of eyes to look at your financial situation. And if we can't do a better job, then at least you know that, and we've confirmed it for you, and that should give you some peace of mind.
It sure should. And if you've got a question about mortgages, if you've got a question about maybe your own situation, you can give us a call, 672-1313. We'll take your calls in the second half of the program, but we would love to deal with a bunch of different situations. Give us a call. You don't have to use your real name. And let us know what kind of payments you're dealing with, what kind of amortization you're dealing with, and we'll be sure to let you know the kind of savings you could achieve if you were dealing with a mortgage broker. Dave, I've got to ask you the other question too. The banks like to hang a dark, scary word over people, and this is another one that you hear all the time, I'm sure, in your line of work, the word penalty.
Right.
We hear penalty, we think, I'm going to the box for 2 minutes, 5 if I've been bad, I may find myself in the locker room if I've been terrible. Penalty has such a negative connotation, but does it need to carry that kind of weight, really?
Not necessarily, and usually that word comes up when we're talking about a refinance on a mortgage. And you know, should somebody refinance if they're already in a mortgage because they're going to have to pay a penalty? Well, the message that we want to get out is, yes, there's going to be a penalty, but let's find out what the penalty is, work it into the whole equation, and see if it still makes financial sense to proceed to do a refinance. Another time where a penalty might come into play is if you're going to sell your house and move to another house and you break the existing mortgage. That's when a penalty would happen. And then you just have to look at it and financially analyze it to see, does it make sense to pay a penalty to get a new mortgage at a lower rate, which most often than not is still better to do, or do I just take the mortgage over and blend it together to avoid the penalty? Usually when that happens, you end up with a higher interest rate because the bank's going to blend your old rate with your new rate. So in today's times, it has been best for clients to break the penalty, roll it in, and you're still further ahead of the game with today's low rates.
Well, we'll talk about some of those rates, the differences between variable rates, fixed rates, the prime rate, the Bank of Canada rate, all kinds of rates. Coming up when we're back with more of the OMAC Mortgage Hour right after this. Welcome back to the OMAC Mortgage Hour here on Rogers Television. Dan Flaherty and Dave Providenti with you. We've already had a lot of people calling in, Dave, so we will get to your calls in the second half of the program. But before we do, I want to touch back on a point that we were discussing right before the break, Dave, and that's the whole question of being a good negotiator.
Yes, there's a lot of people that are good negotiators with their bank, but many people aren't. We're used to going to the bank with, with our hat in our hand saying, what's the current rate? Well, we're the pros at negotiating. So with the volume of business that we do, it's hard to compete with that. So if you're one person with one mortgage going to a bank, you've got so much negotiating power as opposed to a broker who's going to a bank with hundreds of mortgages on a weekly basis. We have a little more clout and a little more maneuverability, shall we say. So we can usually end up with a better rate than what the individual can get at the bank.
You know, that's a great comment, because as an individual, when we go to the bank, we may have, in the course of our relationship with the bank, a mortgage, 2 mortgages, 3 maybe.
In your whole life.
Exactly. So when you're dealing with someone who comes in with literally dozens, hundreds of mortgages, they're going to be treated a little bit differently by that bank.
Absolutely, and the bank only pays us a referral fee. So that's the best part we haven't touched on, is that there is no cost for our services. The bank will pay us a referral fee only after we've placed the mortgage. So it's a three-way thing there. Everybody wins. The bank gets a client. The client's happy because they're getting a better deal than they could ever get on their own, and we're happy because the bank's paying us. So we're offering this service free of charge, and it's a great thing.
Now, I wanted to ask you another question, because not only do you do the mortgages, but refinancing is something that we hear spoken about as well. What do we mean by the term refinancing?
Well, when you refinance your mortgage, all that means is that we're taking an existing mortgage and breaking it, and in most cases creating a new mortgage by blending together any other debts that they may have. So sometimes we're blending debts in, and sometimes we're not. So a refinance simply means we're going to break a mortgage. There'll probably be a penalty involved. Sometimes there isn't, or sometimes it's very small, but in any case, we're blending together and creating a new mortgage to save interest.
All right.
In most cases, that's how it works.
Well, Dave, we've got a couple of examples that we're going to bring up on the screen of situations that people would encounter, and people with mortgages, people with credit cards, and we've got it on the screen right now.
Absolutely. This is a great example of a client that was in to see us, and this is a typical thing in London. I mean, they had a mortgage of $120,000 at 6%. They were paying a payment of $768 a month. They had a credit card. I think it was a Visa for $5,000. Minimum payment on that's $150 a month. An additional card with a balance of $4,000, payment of $120 a month. A car loan of $10,000 at 8%, and they're paying $202 a month for that. Well, I also wanted to be accurate, so I factored in as well a penalty. So the cost to break this mortgage was $2,000. And so basically, when we calculate all that out, we could see that the total payments they were making per month was $1,340.
And again, like you say, Dave, this is not an outlandish kind of example. This is something you see all the time.
Absolutely. And in this particular case, what we were able to do was take all those debts that we talked about, roll it into one mortgage of $146,000. Now we're dealing with a mortgage rate of 3.99%, giving them a total monthly payment of $767.20.
Wow. That's incredible. When you look at that, I mean, you're almost cutting that in half. Savings there, almost $575 a month. That's incredible.
Absolutely. That's a lot of money per month by just making the call to say, hey, can you look into my situation? It isn't for everybody sometimes, but this is not out of the way. This happens a lot in our offices here in the London area. Go ahead. Sorry.
You know, when you look at the difference, again, $572.80 a month, that is, you know, you've got the extra money. There are a couple of things you can do with that, I would think. If we talk about, you know, the difference, if we talk about what did we accomplish with doing that, there are other strategies you can use.
Absolutely, and there's a definite strategy to this refinance product that we're talking about. So what did we accomplish by doing this for the client? Well, we ended up with only one mortgage with a minimum payment required of $767.20 a month. The client was used to paying out $1,340. So what we said in this case is, why don't you keep the $340 in your pocket, you know, so you can enjoy life a little bit.
Save up for a vacation, maybe new windows or something at the house.
Exactly, and then what ends up happening is that all the debts get paid off completely. There's only one mortgage payment to make instead of all those other payments that were being made. The clients just love that. We've included the penalty in this new mortgage, so nothing had to come out of the client's pocket. And you have an extra $340 a month to help your lifestyle if things are feeling tight.
Now, not only that, but the mortgage is gone that much more quickly.
Absolutely. If we just apply some of those savings, in this case, make a $1,000 payment a month instead of the minimum payment of $767, you would take your amortization from 25 years down to 16 years and 7 months, which could likely be where the amortization was before you even started. So people sometimes think that I don't want to do a refinance because I'm going to stretch my mortgage out over a longer period of time. That's not the idea. The idea is get all your debt wrapped up into one neat package at the lowest rate possible so that more of your payment is going to go towards principal and less is going to go towards the interest. It's really as simple as that.
You know, and that's a great point as well, getting rid of that principal instead of just paying interest. Whereas if you leave that amortization out there,
Yep.
that's all you're paying.
Absolutely, and the same thing goes for those debts that we were showing up there. Like, many people carry balances on their credit cards. It's nice to pay them off at the end of each month, but sometimes we're not able to. And at 15, 12, 18%, department store cards at 28%, it takes a long time for those debts to go down. Imagine how quickly they would be reduced if they were at a rate of 3.99%, a lot faster.
Absolutely. Well, if you're watching right now and you're saying, I'd like to find out the kind of savings I could achieve, well, you can give us a call, 672-1313, and we will talk to you on the OMAC Mortgage Hour. And the other thing, too, is have some of those numbers ready so that Dave can fire up the mortgage calculator and let you know exactly the kind of savings you can achieve. Back with more OMAC Mortgage Hour right after this. This is the OMAC Mortgage Hour on Rogers Television. I'm Dan Flaherty, Dave Providenti alongside me, and we would love to hear from you in your situation. 672-1313. We'll let you know the kind of savings you can achieve by moving to a mortgage broker. And also, if you've got any questions about mortgages, about interest rates, fixed versus variable, the prime rate, the Bank of Canada rate, all those sorts of questions, Dave is all set to answer those for you. We also want to mention that OMAC, Dave, we mentioned you're on the phone book, we mentioned you're at the Knights games, you're
Yes.
all over the place. We didn't actually mention the locations because you've got several locations in London and St. Thomas.
Yeah, actually, you've probably seen us in some of the areas around town. We have 7 locations in London. We have the Westmount Mall, our head office at Springbank and Wonderland, Masonville, White Oaks, the Argyle Mall. And in the St. Thomas area, we're in the Elgin Mall and also the Walmart Plaza. So we do have different locations around, 9 to service this whole area, which is quite concentrated, but there's lots of business going on, so it doesn't seem like there's enough offices right now.
There you go. Well, maybe some more growth in the future for OMAC.
It could be.
We'd like to hear from you as well, 672-1313. We are set to go to the phones, and we welcome James to the program. How you doing, James?
Good, yourself?
Very well, thank you. Very well. Have you got a question for Dave?
I do, actually. I'm inquiring about, do you deal with bankrupts? And if you do, how long after a person goes bankrupt do you deal with them?
Okay, and we just lost some audio here. Dave, James wants to know if you deal with people who have gone through bankruptcies, and if they have, how long after the bankruptcy before they can speak to you?
Actually, we like to talk to them at any time. To give us a call, we can look at their financial situation. It has become easier for people with bruised credit, we like to call it, to get a mortgage. So if we can't find a lender to take your mortgage immediately, we can at least let you know what to do to get yourself in a position to be approved. So there's no time that you need to wait. Give us a call. We'll look at your situation, and we'll let you know what has to happen and what you might need to do to improve your situation to get approved.
All right. So is there really any sort of timeline that someone in that situation would have to wait for, Dave?
Well, the thing that's interesting is that there's new lenders coming out all the time, and some lenders will accept clients who have just recently gone bankrupt. Other lenders will take them on if it's been a year since the bankruptcy or 2 years since the bankruptcy. So the best bet is to just simply give us a shout, and in your particular case, we'll let you know what the situation, what the parameters are that apply to you on a case-by-case basis.
And that's great to know, because there are so many different situations out there
Yeah.
for people dealing with mortgages, and I would think you'd see them all.
We do. We've seen everything from tough credit to bruised credit to AAA credit. So we do handle all the different types of situations, and that's what's interesting about this business. You meet all different types of people in all different situations, and it's very satisfying when you can find a solution to the problem that they've got, and that is simply get me approved and then get me the best rate that you can get, that's available. And that's what we're the best at.
672-1313 to talk with Dave Providenti from OMAC here on the OMAC Mortgage Hour, where we welcome your calls and welcome your questions as well. Dave, when people hear about different mortgages that are out there, they hear about variable rates, they hear about fixed rates, they hear reports on the news about the rates are going up. How do you make sense of all of it? It's confusing for the average person.
It can be confusing because there's all these different rates that are out there, and they're quite different. When they're talking about the mortgage rates, most of the time they're talking about the fixed mortgage rates. Those are the typical ones we're used to: 1 year term through 10-year term. You can now even get longer fixed rate terms, 18-year terms, 25-year terms. But those rates are based on the bond market, and if you think of that similar to the stock market, I mean, that's really what it is. Those rates move up and down with how the bonds perform. The one that you hear a lot about is variable, and it's based on the prime rate. The prime rate in Canada right now is 5.5%, and it's supposed to go up another 0.25%. That's what the prediction is. But most of my clients, once we're able to sit down and show them a variable rate versus a fixed rate, the overwhelming majority do variable, and it's a product that floats below prime. It's not for everybody, so if you're going to be nervous and you're going to lie awake in bed nervous, you can't sleep at night because you're in a variable rate mortgage.
What your mortgage rate's going to be tomorrow.
Guess what? We're going to fix you in for at least a 5-year, or better yet, a 10-year term, so you know exactly where you stand. If you want to be a little more aggressive and pay less interest and pay your mortgage off quicker, history has shown, and the strategy has shown to be very good, to go variable, and that's one that floats below prime. In that example that we just did for the audience a few minutes ago, the rate of 3.99%, that was a variable rate, and that came from 1.51% below prime. That's what we're able to do with the banks on these mortgages. So
that's a huge difference.
well, it's keeping us busy, and a lot of people want to go that way.
Well, let's go back to the phones and find out which way our next caller would like to go. And Cam, is it?
Kim?
Cam, hi, Cam.
Hi. I just recently got some information about a home line from my bank,
Yes?
and I guess the amount that would be outstanding would be about $25,000.
Okay.
And the suggestion was to maybe collapse that into, like what you were just talking about, a mortgage along with our house amount.
Right.
But I also didn't know whether it would be better to just have the second home line under a shorter term. Like, would that make more sense in terms of amount paid on interest?
Generally speaking, when it comes to those situations, we're usually better to get one new first mortgage at one low rate. When you're talking about lines of credit and second lines of credit, if it's a line of credit that's secured against your house, you're probably paying around 5.5%. So what's happening nowadays is we're getting a lot of folks that are saying, let's get rid of the line, pay it off, put it into a mortgage at 3.99%, and now we're on a steady payment plan, which will see the line of credit start to be paid off. Whereas if you just leave it alone, a lot of times we're just making minimum payments or slightly more. We can attack it a lot quicker at 3.99%. So our first line of attack on that situation would be, let's see what we can get you in a brand new first mortgage, and failing that, we would look at getting maybe another line of credit perhaps, or a bigger line of credit at prime. That would probably be your best option as far as the line of credit goes, is prime, which is 5.5. So that's why most folks would go the other way and go into a mortgage at 3.99.
For people who are watching right now, Dave, at home, and they're hearing us talk about mortgages and rates and that sort of thing, at what point should they take a look at their own situation, their own mortgage, and say, you know, this sounds to me like a pretty good opportunity to move into something where I'm going to pay a lot less? What sort of rate should they be making that consideration at?
That's a good question. I've been telling people that if you're paying 5.5% or more, you should be calling us, because we can make a significant enough difference, even with a penalty included, to make it worth your while. In many cases, our clients are getting brand new mortgages at these low rates, and the only thing they're having to pay are the legal fees, roughly about $450. That can even be included if you wanted it to be. So there's nothing really stopping you from checking into it. I mean, if it doesn't make financial sense, we'll say, all right, well, let's check with each other in a year's time and see if it makes sense at that point. But at this point, why not check it out and just see if it applies to you? You could end up saving hundreds of dollars per month just by making one phone call and looking into it.
You know, and with the example that we had moments ago on the screen, it was dramatic, the difference in terms of what was being paid and what someone could pay. So if you'd like to find out the kind of savings you could achieve, give us a call, 672-1313, and we go back to the phones where Barb is standing by. Hi, Barb.
Oh.
How you doing tonight?
Oh, I'm fine, thanks.
Good, good.
I would like to field some questions to David. Do I have the name correct?
Yep, Dave's right here. He's all set. We're just having a bit of a tough time hearing you, Barb.
I just happened to turn you on, and this is very interesting to me. I have a mortgage. I have a condo.
Okay, Barb, sorry to interrupt you. We're having a bit of a challenge with the speaker. If I could ask you just to stay on the line. We're going to take a break. We'll get things sorted out, and we'll come back with your call and Dave's answers in a moment, right here on the Omac Mortgage Hour. Back after this. Welcome back to the Omac Mortgage Hour on Rogers Television, where we take your calls and answer your questions about mortgages, about refinancing, about rates, about just about everything, I would think, Dave, that you're qualified to answer. We won't get into veterinary stuff or anything like that.
Anything having to do with mortgages or residential financing, fire away.
There we go. Well, let's go back to the phones. Barb, thanks for hanging on the line. I hope we've got our situation rectified. There we go. Welcome back, Barb.
I don't have any veterinary questions. I have a cat having surgery right now. We're looking at surgery on my home. I have a mortgage. I believe the balance is $99,000. It was $131,000, and I was looking at moving my mortgage to another bank or another mortgage company because I'm very, very unhappy with the situation with my other accounts at the particular bank that I'm using. And I talked to several lenders last year, and they were very willing to do that and pay the penalty if it was in the $2,000 range. When I called, I discovered the penalty was going to be $4,300, which shocked me and shocked everyone I had spoken with. They don't want to lose me, obviously, but I have 2 years left on this mortgage, and I am going to get out of it because I'm extremely unhappy with. I'm doing the work for this bank with my other accounts. I'm not happy at all. So
Okay.
I have a loan on my car, $300 a month. I also have a small line of credit. I had a larger one that's paid off, and I have a balance on a credit card. And I'm wondering if this might be an answer for me. I am a senior, and everything else is going through the roof except my payments I receive are not. Unfortunately, they're stable. I don't know how this would work or if it would work for me.
Okay, if you were to total up your mortgage and your other debts, because I didn't get a chance to note them all down, but like the total amounts owing, do you know what that is roughly?
Yeah, Barb, just how much the total would be on the course of the month? We had the 300.
I'd have to figure that out. $99,000 on the house,
Right.
$4,000 on my credit card.
Okay.
$4,000 on the credit card.
I think probably about $12,000 on my car,
Okay.
and maybe $1,000 on the line of credit.
Okay, any other debts you can think of?
And any other debts you can think of, Barb?
No, I don't have any.
Okay.
The others are all, my gas bill and.
Okay. Well, I'll give you an idea. The total debts, if we were to total those up, it works out to about $116,000. If we were to put that into a variable rate mortgage today at 3.99%, we could pay everything off, including your mortgage. Well, we wouldn't pay off the mortgage. We'd have a new mortgage, but we would pay everything else out. Your monthly payment for that would be $609.55.
Wait a minute. That's the mortgage, that's the car, that's the credit card, that's the line of credit, that's everything?
Yeah, everything gets rolled into one neat package. Do you know roughly how much you're spending a month on all those things right now?
About $1,450, $1,500 a month.
So you can see why we're so busy right now. If we basically roll those debts into one neat package for you, attack it like a mortgage at 3.99%, the minimum payment required is $609 a month. We're going to save you, in your case, about $800 a month.
How does that sound, Barb?
My rate is 6.6. I think that's what I'm paying right now.
So you fall into that same window there where if you're paying higher than 5.5, you're at 6.6. The savings will be fantastic. Not to mention you're getting your credit card paid out. You have no more car payment, just one payment per month going out this way. Now, In your case, I may not suggest that you just make the minimum payment. Just like in our example, let's put a little more dollars towards this mortgage, and we'll have it paid off that much faster.
I agree with that.
And I think that's a smart thing to do. So in your case, if I were you, I would be calling soon.
I'm not in a hurry to pay the mortgage off because that's not a concern.
Right.
But I do think that we could do maybe $900 a month.
Yeah, I was going to say, yeah, your concern is your cash flow, and you're going to have about $800 a month more cash flow to deal with.
Barb, thanks so much for the call, and
And I
wow.
wouldn't be running behind with my phone bill and Rogers cable.
No, you
All
sure
those
wouldn't be,
extra
we want to get that Rogers cable bill paid. Very important. Barb, thanks so
Oh,
much for the
let's
call.
pay it today.
All right. Take care, Barb. Bye-bye.
Okay, thank you very much.
You're very
welcome,
Bye
Barb.
now.
We're going to take a break. Chad is standing by. We'll get to Chad's call and more on the Omac Mortgage Hour right after this. Welcome back to the Omac Mortgage Hour on Rogers Television. My name is Dan Flaherty. Alongside me, Dave Providenti from Omac. And, of course, we welcome your calls. 672-1313. And we go back to the phones. Dave, right away, Chad is standing by. Hi, Chad.
Hi, how are you?
Very well, thanks. How are you doing tonight?
Pretty good.
Good. You got a question for Dave, Chad?
Yes, I do. I know you're going to be truthful because, especially when I'm live on the air,
Absolutely.
I cannot get a truthful answer from any of the banks I've called. I called a lawyer, and he was nice enough to send me a $115 bill for telling me how much my payments were going to be.
Ay, ay, ay.
There's no mortgage on my house.
Okay.
I bought it personally off a family member. What I want to do is I want to take $25,000 out,
Right.
give it to this person.
Right.
That way I owe her no money.
Right.
My problem is I call a bank, they're saying line of credit. So I call another bank, and they're saying take out a mortgage. You're stupid because you want $25,000 in one shot. So I'm not going to borrow $25,000 and decide I need another $10,000 and another $5,000, like, and put in a pool for another $10,000. All I want is $25,000
Yeah.
in one shot.
That sounds really, they're making it really confusing for you. What would you say your house is worth, Chad?
Probably 180.
Wow, I can't understand why. I can tell you right now, we can get you a mortgage for as little as $10,000. We don't do very many of them, but the lenders will do a mortgage for that little amount of money. So,
They will.
so $25,000 is not a problem. I think the banks like to sell lines of credit because they're easy for them. You use it over and over again, and it's also at a rate of 5.5%. So, you know, for that little amount of money, they're going to try to make some interest off of you, and they're going to charge you 5.5% for a secured line of credit.
Yeah.
My advice would be give us a shout. We would arrange a mortgage at 3.99% and for $25,000. It's really a no-brainer.
My bank told me that they don't do it for $25,000.
I guess the thing, Chad, is it's not worth it for them at $25,000.
Yeah.
They're not going to make enough money
Yeah.
off you.
That's the problem.
Yeah, they're guiding you to a product that makes sense more for them than it does for you. So I would certainly say pursue the mortgage option, call a mortgage broker, and let us place it for you because it's not a problem at $25,000.
Okay.
There you go, Chad. Best of luck with that.
Okay, thank you.
All right, and we were honest with you. Totally upfront and honest.
You had to be. You're live.
Take care, Chad.
Thanks, pal.
And by the way, we always are.
That's right, that's right. Always live on this program, for sure. We're going to take a break, duck away, take care of some business of our own. We'll be back with more of the Omac Mortgage Hour here on Rogers Television right after this. Welcome back to the premiere edition of the Omac Mortgage Hour here on Rogers Television. First night on the air. How you feeling, Dave? I got to ask you that question.
Feels pretty good. I was a little nervous in the beginning, but we're starting to loosen up. It's great.
Very good. You know, before we went to break, I had a question when Chad was talking, and he was talking about the challenges he had working with the banks to get a $25,000 mortgage. And I guess I was thinking it kind of makes sense because the banks need to make money. to pay for the bricks and mortar, to pay the rent, to pay for all the things that come with a bank.
Exactly, and I guess that's our point of difference. We're like self-employed people. We cover our own expenses, our own staff, this type of thing. So when the banks don't have to cover those things, we get a better rate. So that's really been our strength, is we can offer better rates than the local bank branches because there's not the overhead to consider. That's the bank's expense. It's my expense. So we only get paid when we produce a mortgage, and that makes a big difference to the client's final rate.
Makes a huge difference.
Yeah.
Well, let's go back to the phones where Evelyn is standing by. Hi, Evelyn.
Hello.
Thanks for joining us tonight.
Yes.
You have a question for Dave?
Yes, I would like to know your opinion on the reverse mortgage for seniors. Is it a good thing to do or not a good thing to do?
You know, that's a really good question. It's becoming more and more common nowadays that people are taking reverse mortgages, and maybe
What exactly is a reverse mortgage, Dave?
a reverse mortgage is very similar to an annuity, where somebody in their elderly years would get a reverse mortgage and not pay a payment, but receive a payment each month based on the equity in their home. I've heard both sides of the equation. I've heard people that have been very happy with them and people that have been very disappointed with them. We personally don't get too involved in reverse mortgages. I have referred people to the TD Bank, for example, to ask questions about reverse mortgages. It might be something that we get into a little later, but right now they're the experts when it comes to reverse mortgages. We haven't really done too many. I have heard, though, from clients that have had them, some that were happy and others that were very frustrated. I can tell you this, if you get into a reverse mortgage, it is tough to get out, and if you do get out, it can be very expensive. So the best advice I can give you is look into it very carefully, and the first place I would direct you in this case would be the TD Bank.
Okay. Does that help, Evelyn?
Great, thank you very much. Now you're offering mortgages at 3.99.
Yes, we are. If people want it, now there's another way to fund your retirement, right? You can take a mortgage out and at 3.99%, and that is available for everybody. So you could call and get that for yourself.
Okay, great, thank you very much.
Thanks,
Thank
Evelyn.
you, Evelyn. Bye-bye. Terry is standing by. Let's go to line 2. Hi, Terry.
Hi, how are you guys?
Very great. How are you?
Good.
Very great. It's like we're super good, I guess.
Well, we're feeling good tonight anyway.
There we go. What
Yes.
can we do for you, Terry?
I'm locked into a 5-year mortgage term, and I'm thinking about selling. I got about 2 years left.
Okay.
Now, is that going to be a big penalty to get out of this? Or
There's that word hanging over.
Yeah,
You can hear it in Terry's
so
voice.
did you say you're thinking of selling your house in the next little while?
yes.
Okay, well, when that time comes, that would be the time to look at it to see if it makes sense. If you think you're going to sell in the next little while, what I would do if I were you is come and see us, I would say 2 or 3 months ahead of time, so that we can look at the options for you. And basically, I'm assuming that if you did sell your house, you'd buy another one?
Yes.
Okay, so there's basically 2 things we can look at. Taking the existing mortgage that you have and moving it over to the new property and blending it together, and comparing that to just paying out the old mortgage, paying the penalty, and starting off with a brand new mortgage on your new house. I can tell you from my experience that it has been in the client's best interest to just pay out the mortgage and start out brand new in most cases. But again, we look at each case individually. So once again, I would suggest give one of our offices a call, let us take a look at it, and we'll do the comparison. It's really simple. We'll lay it out in black and white. Here are the numbers. If you do it this way, this is what you're going to pay. And if you do it this way, it's going to be less. So obviously choose the lesser one.
What are you talking in numbers like for 2 years left on a 5, would you, to pay it out? Like just
Like in terms of the penalty, Terry?
yeah.
What interest rate are you at right now, Terry?
I think it's a 5.6.
Okay, your penalty should not be that big because you're not far off what the current rates are. Your penalty could be calculated 2 different ways. One is 3 months interest on your mortgage, if that's what your mortgage agreement calls for. Or what they'll do is they'll calculate the remaining months that you have left on your mortgage where they're not going to get that money, and you would have to make up that difference. But you're not far off of what the current rates are, so if I were you, just make a simple call to your current lender, or we can do that for you, and let's find out what the penalty is to get out of it, and then we just make our decision from there.
Okay.
All right.
Sounds good. Thanks a lot.
Terry, you're welcome. Thanks for the call.
Bye-bye.
Thank you, Terry.
Bye-bye. We do have time for 1 or 2 more calls, and we will take those after we come from the break. So we'll be back with more Mortgage Hour, OMAC Mortgage Hour, on Rogers Television right after this. The Omac Mortgage Hour here on Rogers Television with Dan and Dave, and I love that little intro. I feel very matrixy somehow
It's
in the
nice.
studio.
That's nice.
Like we should be wearing sunglasses and dark coats or something. We do have time for some more calls, so let's get right back to them and welcome Lorraine. Hi, Lorraine.
Hello. I had a question, actually. I'm not sure if this was covered, but we're planning on moving to British Columbia.
You're planning on moving to BC? Okay.
Yes. So we wanted to sell our house that we have here and move with a mortgage. I haven't talked with the bank yet regarding it, and I just tuned into the program. I thought I'd call in. How does that work? I don't know if he has that type of information.
Okay, Lorraine, let's recap it. So you've got a house here in London.
Yes,
And you're looking to move to BC.
that's right.
Okay, so what you'd like to know is if you can take that mortgage with you?
That's right. And if there, I don't know, I know some provinces, the rules are different with how you can do a mortgage. I'm not quite sure.
Right. The answer to the question is yes. If you're with a major, are you with a major bank with your mortgage?
Yes.
Yeah. So coast to coast, you can take that mortgage with you and take it with you to BC. It may not be in your financial interest to do that, but at least you know you can if you want to. So I would again suggest that you explore the option of taking the mortgage with you, but also paying it out and getting a brand new one. You might be further ahead to do that.
Oh,
All right?
great. Thank you.
All right, Lorraine, good luck with the move.
Thank you.
All right,
Yes.
bye-bye.
Good luck.
When we talk about springtime, and we're right into the heart of spring with the weather today, it was awfully warm. Is it a busier time of year for people to think about their mortgage? Are a lot of people coming up for renewals?
In our business, Dan, it's been busy really all year round. It has become that kind of a business, but we do see a spike around this time because, like you say, the weather's nice, people get out, start looking around. So we're seeing a lot of people coming in and getting themselves pre-approved, and that's really a good first step to take. Let's find out up front how much you qualify for. Let's find out up front how your credit looks and what kind of documents we need to provide so that you can go out shopping with confidence, knowing that you can go to a certain price range. So this is really keeping us busy now, and is getting people pre-approved. And walking them through the process early is usually the best bet. That way you're looking at something that's in your price range, and there's really no surprises when it comes time to, yes, I want to buy that place, and can I make an offer? You know that you've got us behind you, and you have confidence in doing that.
How does that process work, Dave? For someone who's coming in and they'd like to, maybe for the first time, deal with a mortgage broker, and they come in, they make the phone call,
Yeah.
and they walk into the office, what happens? What's that like? Because a lot of people get an idea what it's like going into the bank because it's kind of like going into the principal's office.
Well, we try to make it a little easier than that and a little less intimidating. So the way it works is that we would take your phone call, usually, and take 10 or 15 minutes of your time over the phone, just taking some basic information. With that information in hand, we'll enter it into our computer system, pull a credit bureau, and do all the financial analysis and calculations to figure out, A, that you are approved, and B, how much am I approved for, and what do we think the best rate can be. So this usually happens within a 24-hour period. So it starts with just a 10-minute phone call, a little bit of information over the phone. Then we can call you to let you know what the approval is and for how much, and then encourage you to come in and sit down with us, because then we can have you at our desk with our computer system showing you the payments and everything that works. So we've streamlined the system to make it as easy as possible, and it all starts with just that one phone call.
One painless little phone call that gets the ball rolling.
And you know what? The most common comment we hear after the fact is, why didn't I do this sooner? I heard my friends, I've heard you on the radio for 2 or 3 years. Why didn't I make the call sooner? It's a common thing. So please don't hesitate and procrastinate. Just take a shot and see what we can do for you.
I'll see what we
Why
can.
not?
Yeah, absolutely. It's a simple phone call, and it's a simple process, and it can make such a huge difference to you and to your family as well. We are going to be back with more of the Omac Mortgage Hour. I thought I'd get through the whole show without messing it up. It's
No
the Omac
problem.
Mortgage Hour, our very first show here on Rogers Television. Back right after this. This is the Omac Mortgage Hour on Rogers Television. Glad to have you with us on our very first show. And the first show is just about blown by. It seems like it's been only a couple of minutes. We've been sitting here, Dave, talking about mortgages and answering people's questions and helping them out with their particular situations.
Time flies when you're having fun, and thank the audience for calling in. These are great questions, and I hope they keep them up because they keep me on my toes, and it's a good way to educate the public because many people have the same questions.
And not only that, a lot of people see the reader signs out on the side of the road, whether it's out front of a bank or out front of an office, all kinds of percentages around, fixed, variable, 5-year, 10-year. I heard something about a potential 30-year mortgage out there on the horizon. There really is a whole maze of numbers and different avenues someone could follow. You really need almost a tour guide to get through this sort of thing.
Yeah, the mortgage landscape has changed tremendously since we first started, and it seems every week there's a new product that addresses a different need, a different niche product. So the nice thing and the cool thing about going to a broker, it is like one-stop shopping. We will match the client with the product that's perfect for them. You don't always get that when you go to a bank. When you go directly to an individual bank, they can only offer you what they have on their shelf. When you come to us, we have 30 different lenders with all these different products for different situations, and we can match up the client to the right product. So I guess that's the biggest advantage and why people should use a mortgage broker.
Well, questions such as that, questions about refinancing, questions about mortgages, long-term, short-term, fixed, variable, that's what this show is all about. We want to thank everyone who called us tonight on the program. We will be back next Tuesday, and of course we're rebroadcast on Sunday. You can check your listings. You can also check rogerstelevision.com for when we're on, and tell your friends. We'd love to spread the word about how you can save. We also want to thank Sutherland's Furniture Plus for supplying our furnishings for the show, and we'll be back next Tuesday night, 7 o'clock, right here on Rogers Television with the Omac Mortgage Hour with Dan and Dave. Thanks so much for joining us. On behalf of Dave, we'll see you next week.
Thank you.